Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature, looking at the last print of 1427 on this, the 11th day of December 2012. Got a lot to cover today. We've got some updated portfolio performances. We've got a Fed FOMC meeting conclusion tomorrow on the 12th. We've got our annual Double Your Money sales event, which a lot of you guys wait for, who are looking to subscribe or add to exposure, and because it's really an incredible savings, 50% actually for the entire year, to be able to follow the MiniAnalyst.com portfolios. But we're going to jump into some quick market analytics, and as you can see, what a beautiful move we've had into this FOMC meeting, the conclusion tomorrow. Beautiful move this morning. This, of course, is Tuesday. We often have TATs, turnaround Tuesdays. This has been kind of a continuation Tuesday. Tuesdays are just great days to trade. Having said that, we have had some longs fire off here, so this has been a little bit painful here, but we've also had some longs here, and of course some longs I believe on the swing side. Nevertheless, we're going to get to that in a second. Right now, we're looking at an intraday chart. These are intraday dynamics, our proprietary indicators that we use to gauge the market, where it's likely to go. And as you can see, the red means bearish over here, and the green certainly means bullish. And this morning we had actually accelerating bullishness, as you can see right here, accelerating bullishness in this indicator, full all-out bullishness here, and here full bullish trend. We're above the prior day's highs. Gap to the upside. We've now almost filled the gap, just simply retested the lows of the early session around 23. Nice, impressive bounce, but as you can see, we're right back to the trend. So, having said that, as you can see, we've had this full cross, an essential breakdown of the trend, so we're not really going to issue a day trade. As you can see, there's really a mixed indication. Price should not have fallen below the trend here. As you can see, we did have some waning in the bullishness, the light green, full all-out bullishness. As you get into the darker shades, certainly the bullishness has waned a little bit, and that's actually what you've seen. We're now simply at a retest of the underside of the trend. Really, this is December. You're going to get a lot of Chop City until at least the last couple of weeks when we get. Right now, you're getting a lot of jostling portfolio year-end maneuvering and that's why you get these kind of choppy moves. Nevertheless, we're going to look at our portfolios, which, as you know, are really not just over intraday. These are fun to look at. Intraday scalps, great setups when they occur, when they coalesce with the timing of the videos, but you don't really make your money in and out of the market all day long. Well, you don't. You make your money over the longer term, and that's why we usually, although we offer monthly, you can follow our portfolios on a monthly basis. That seems to be what the in this new economy, what the people are willing to commit to. Our clients, especially new prospective clients looking to try it out, don't really have the money or want to commit to 3 months, but you definitely do need to commit to at least 3, 6 months, even a year. But to get started, you can do so with just on a monthly basis. Having said that, over time is where you're going to make your money, not really in these scalping trades. As we look at this right now, we're not really seeing a setup. It would be short, but as you can see, there's a beautiful shorting opportunity here at 27, but with full all-out bullishness is not really going to take that trade. So let's a quick look at the intraday dynamics. We're going to go ahead and switch over to the daily chart, which is right here. Okay, so we're looking at a daily chart of the S&P 500 futures. And we'll scroll out just a little bit. And as you can see, we had that nice move up. Got to a high of 35, looks like. 34.25. Got 31. These are the highs right here. 31.75. These are the highs early November. 31.75. Double of them. Got to the retest. Overshot it just a little bit. Unfortunately, weren't able to carry on to a move of 13.40. You always want to break out move, but rarely do they happen, particularly in this kind of market environment. We have actually turned the trend back to the upside. As you can see, we went officially bullish all the way back here. We did have that beautiful test of our convergence of our key 200 period SMA and EMAs, our longer term measures of trend following significance. We did have the fib retracement to the 6050618, beautiful test of 1340. As we've often mentioned in this space, been trading the S&Ps about 14 years. They love the 40s and the 80s. And this was no exception. Here we are, 40, almost back to another 40. And of course, we really would have liked to have gotten to that 40 today. The day is not over. It's pretty close. It's late in the session, but nevertheless, holding this key former fib retracement zone right here. As you can see, the 5618 right there. So bounced off here. Kind of a mixed indication. Going to be a choppy environment probably through the next month or so. But that's why you want to be positioned. You don't want to be left out in the cold. You definitely want to be positioned with a professional advisor, such as the MiniAnalyst.com. But quick look at the daily analytics. As you can see, we have momentum here, fully bullish, intermediate term and short term. Intermediate term directional movement, short term bullish, and intermediate term starting to pull up here. Once we get the full all-out turn in the gray measure here, you'll definitely see some continuation moves, and we definitely look for a move to the 1460 to retest that in the very short order. We actually expected yesterday probably to go back down and walk along 1400 a little bit and have a safe, nice basing pattern before we went on higher. Markets do what they want, and as you can see, we've got the continuation move today higher, so that's pretty bullish for the market in general. Of course, we do have this resistance, but nevertheless, we have directional movement, bullish, momentum bullish, price technicals now bullish, trends all three bullish. So we have a bullish picture, folks. So how have the MiniAnalyst.com portfolios been doing? Let's take a quick look at the sentiment picture. As you can see, the reason the market's moving higher is we've yet to see some complacency. Here you got a reading of extreme complacency, sell-off, boom. As you can see, got some readings of we've yet to have any readings of complacency, and we're at a new high. So this indicator, you need to see a spike down here, 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 here. Definitely see a spike around the 4.0 level. We're at 6.5. So the market has plenty of room there's plenty of buyers left on the sidelines waiting to get in, and that's probably what's going to happen as the market, this is the mini Russell, moves to retest 860. The VIX kind of bouncing around in these lows. Pretty much anything can happen. That's a quick look at the sentiment picture on the daily chart, and from a contrarian perspective, definitely we expect some higher prices on the front there, so we'll go ahead and minimize that. And now we're looking at, we'd mentioned some key longs over here. This is EVR3 TSR, and almost got bent but didn't break us. Almost got bent out of let long setup right there. But as you can see over time, the equity curve, beautiful. EVR3 ACTSR, similar setup, again bent but no break, very nice formation. EVR3 filter, not trading, beautiful equity curve. As you can see, R60F trading early in the session, long, again not getting whipped out. MDS long from just the other day, so that's having a nice 1,750, nice 500 bucks sitting on the profit. EVR3 VSR, similar long setup, again bent but no break. MRSC and PTL unfortunately got whipped out right here, but a beautiful time to get back involved in the MRC and PTL, given that we've had this little bit of retracement. R30C, no trades. R30B, no trades. And the R30A, no trades, but as you can see, beautiful equity curves. EVMCM, as you can see, going long early this morning, 2 contracts. So we've had a lot of longs firing off. CBR going long earlier in the session. ISRD, unfortunately short on the long side. We'll see how that goes. EVR3 itself, going long earlier in the session. Beautiful equity curve over the last decade. These are all over the last decade. ES30MX exiting some long exposure there. Been kind of a rough road, but did definitely bounced back to a nice green dot. You see that regular ESM30 breaking out to new highs, several green dots. Great time to get involved in that model. And these all, of course, are part of our MB1M. We'll talk about that in a second. There's the grind. Nice new highs on the grind. Grinding out to new highs. R60. Again, another got hooked on a long setup earlier in the session. Bent but no break. Definitely wanted to add on a discretionary basis more long exposure at the 32 mark. Didn't do it. Day Trader 8.0. EV, beautiful longs, as you can see. Swing System 5.0, those three really not going to look at, aren't really participating, as you can see. So we're going to go ahead and move over. We've looked at the daily. All right, so we've looked at quite a bit of the analytics. Now we're going to switch over and look at the actual portfolios. We've got our annual Double Your Money sales event that's going on right now. Usually it starts on about the last week of the year. I want to go ahead and give you guys plenty of time to get involved in that. Today's the 11th, so over a couple of weeks to get involved in that. And as you can see, these are the current portfolios. We'll go ahead and look over here at the portfolios right there. So you have the Valerius. This is third-party tracked. You have PR100, EVR 350, MSA UDT right here, third-party tracked. There's a quick little look at the equity curve of the MSA UDT. Always a popular portfolio. Why? Well, it's only got a $10,000 starting point for risk capital, so not too bad. $8,489 in profit. For the MSA UDT, just over 7 months, which actually we just started December, November 1, 2, 3, 4, 5 months essentially. So this actually reads 7 months tracked. So I'm not sure where they're getting the 7. Nevertheless, 286% annualized compounded return is what we're looking at for the always popular MSA UDT. Trades about 6 contracts, 6 systems, as you can see, 6 systems across. 6 systems across. We don't have the we actually have a $10,000 discretionary portfolio. I might be able to show you guys that we just started. It should be quite popular. I believe it's going to be around the same price as the MSA UDT, $300 a month. Save $199, and we'll look at that in a second. MSA UDT MB150, $150,000 portfolio. There you see MB1M, $1 million portfolio. Pretty impressive returns. You guys can peruse those at your leisure. But we're actually going to switch over and kind of look at those, but we also want to make mention, very key component about trading futures, and particularly stock index futures, are the tax implications. And as you can see, we did a quick little chart. Trading mini futures saves $8,000. So let's say you had a $75,000 gain on a $25,000 account, or a $75,000 gain on a $100,000 account. Doesn't really matter. A $75,000 gain is the key component here. $259,000 if you compounded that over 5 years. So what happens is you trade let's say $100, $100,000, what have you, in futures, stock mutual funds, your stocks. You're going to get an effective rate of, at current long-term capital gains tax rate of, you're going to save almost 11% over just a typical 33% ordinary income tax rate. For instance, over here, $75,000 in both. Your 60% is going to be at the long-term capital gains tax rate, which I believe is 15, maybe 20. You have to ask your accountant, and it's probably going to go up, I think, to 20 after the first of the year. But it's 15 now, going to go up to 20. So this is for this year. Of course, next year it'll be 20, so it'll be a little bit higher comparatively speaking. But other taxes as well are going to go up, so it might all even out as a wash. Short-term rate 33%. Oh, getting a lot of exits there, and we will pause this video for 1 second to make sure. Okay, alright, we're back. Sorry about that. Everything appears to have exited appropriately. And so we were talking about taxes. So the savings is $8,100 on a $75,000 gain, 60-40 split at the long-term rate, versus if you're trading stocks or if you're trading what have you, you're going to save quite a bit on taxes. So that's pretty pertinent information as we go into the year end. And then you can take that $8,000, you can compound it at 100% gain. Essentially, we target 100% real returns per year. We do have portfolios, for instance, MSA UDT that gained 400% last year or so. and but we target generally 100% returns, which is pretty enviable, particularly in this market, this economy. So we're going to go ahead and switch over and look at a couple of those portfolios that we were just looking at. Let's take a look at the MSCI UDT. As you can see, well, let's go back to the home page, shall we? So this is our Double Your Money sales event, and you can look at a quick snapshot of how everything's gone. Valerius, $50,000 portfolio. MSCI UDT, $10,000 portfolio. Has been tracked by a third party. 15 months for Val, 7 months for the MSCI UDT, and 287% annualized return for the MSCI UDT. 56%. Valerius underperforming a little bit, but that's because we have had a particularly nasty drawdown in the portfolio. As you can see right here, there's been a bit of a clip. We got up to almost 100,000, 100% return, and then it just we've had kind of a drawdown. This is fantastic for prospective clients, because this is the time you want to get involved. You don't want to get involved up here. You want to get involved down here, and that's why it's perfect timing coalescing with our annual Double Your Money sales event, where you can save you can save 50%. Now you got to purchase a year. This is $300 a year, $400 a month. So it's $4,800, $2,400 for the entire year of a $50,000 portfolio, and of course you get the outstanding timing. Going back over the MSCI UDT, if you can look, this is a better snapshot of the equity curve. Had a nice little pop. Flat, huge pop, retracement. Again, these are the opportunities you want to get involved, and new highs for the MSCI UDT. As you can see, $8,489 in profit. Going back to over here, that's the $8,489 profit. Annualized, it's over the last actually 5 months, so I'm not sure where they got 7. The premium portfolios, this is the EVR 350, the Matte Black portfolios, Platinum Reserve 100. As you can see, going back over a decade, 100% return for a few of them, 50% annualized return for the larger portfolios. These are much more conservative. We'll look at the MB 500, for instance, drawdown as percent. The drawdown is a ridiculously small $121,000. That's only 24%. That's the maximum. That's not just the closed trade drawdown. That's the actual daily drawdown as you hold position. So it really takes into account, really looks at the way the portfolio has performed, and that's the figure that you have right there. Is the daily drawdown. Not only is the closed trade drawdown the one that's actually cemented. This is a paper. This is what you've lost on paper. The maximum loss on paper. Once you've closed the trade, then that's your actual realized. That's your real loss. That'll be a smaller figure. And then you have an average drawdown. Which will be substantially smaller. We'll look at those in a second. Nevertheless, you have 24% maximum drawdown. The worst case scenario, bar none, and that's including slippage and commissions. Over 300,000 over a decade. 90,000 commissions have been deducted from these totals from each trade. Use, I believe, $25 a round turn in slippage and commissions. As a percentage of total equity, the MB 500, what you have here is just a 7.58% drawdown. In other words, that 121,000 when it was incurred. We'll go ahead and look down here. Here's your daily drawdown. We had a $121,000 drawdown in the portfolio, and of course the crash of '08 when the world was falling apart and banks were dirt cheap, best trade in the decade. Nevertheless, $120,000, and that's your figure. So kind of an aberrant event is your actual figure for the portfolio. Now if you look at this chart, you can see the average drawdown of the portfolio is actually much larger or much smaller, and this is actually the daily drawdown. This isn't the closed trade. We'll look at that in a second. The actual drawdown is much smaller. It's about a quarter, 20%, maybe a quarter of this figure. This is a $500,000 portfolio. So this figure was just this $121,000 figure was just 7.58% of this figure right here, which is about 1.3 million, starting with 500,000. So as percentage of actual equity, you're looking at a maximum drawdown daily drawdown of $121,000 or just 7.58%. If you take this figure, which occurred here, and you backwardize it to here, that's your maximum drawdown of 24.2%. So what that leaves us is a look at the average drawdown is really much more interesting, and that is an average drawdown on a $500,000 portfolio of just $30,000. That's not too bad. It's about 8% or so. And if you look at the closed trade drawdown, that's much smaller. For instance, this $120,000 loss was never realized. We needed to have capital and margin requirements to meet that, but this drawdown was never realized. The actual drawdown, I'm assuming, maybe it was right here. I'm not really sure. The actual drawdown was just maximum drawdown was just $42,000 on a $500,000 account. The actual drawdown was just $40,000 or so, and that's the trade close. So that's your realized drawdown. Again, the actual average drawdown is closer to $15,000. So if you take all these figures and average them, you're looking at about $15,000. So the average realized loss for a $500,000 account earning $2.5 million over a decade after slippage and commissions is just $15,000. So phenomenal. And this trade's 51 contracts, so probably about 20, maybe about 15 elite trading models is the MB500. MB1M trades 200 contracts. Again, you're looking at ridiculously small numbers, crazy numbers, but average over time. The drawdown has gotten a lot worse here, but on $1 million account, and we're definitely running overtime. So if you're interested in these portfolios, if you have any questions at all, year-end questions, shoot us an email to admin@MiniAnalyst.com. Take the site and peruse it. Take a look at all these numbers. They're fantastic. Very fascinating numbers when you can delve into all the analytics of all of our elite trading models. And these comprise, particularly here, you have all of our elite trading models. There are about 20. As you go down, this may have 12 to 15. MSA UDT has 6. EVR 350 has about 6 or 7. PR 100 has about 10 or so, and on down the list. But if you guys have any questions, let's go ahead and do a quick. Let's say you want to start off with a $10,000 portfolio, add to cart, MSA UDT, and is not valid. Well, let's just, can we see our cart? Okay, so there's our cart. Now, MSA UDT, that's $300 a month, or you can purchase 12 months, add a little 2 there. We've already entered our promo code, double my money is what I want. So I'm going to apply that. And I thought I had 12. Oh, there we go. So we'll recalculate that, maybe get rid of that air box. So $3,600 for the year, $300 a month, just $1,800 is all you're going to pay for the entire year of following MSA UDT. So if you guys have any questions, shoot us an email to admin@MiniAnalyst.com. Go to the website, chat with the support team live, ask an analyst if you have any other questions. If not, we will see you next time, and hope you'd have enjoyed the update, and we will see you next time.